Hello, everyone, and welcome back to the Pink Portfolio, where we decode finance in a way that actually makes sense. Today, we are tackling securities, the fancy sounding term for the building blocks of investing. Think of them like designer pieces for your portfolio. Some are classics, some are trendy, but all have potential. So, what are securities? At its core, a security is any financial instrument you can buy, sell, or trade. It holds monetary value and can help your money grow. Imagine a collection of handbags. Some are Chanel, some are Zara, some sit in your closet collecting dust, and some become timeless classics. Securities work the same way for your cash. And in this video, we will talk about different types of securities, such as stocks, bonds, ETFs, and derivatives. First up, let's talk about stocks. Buying a stock means owning a small slice of a company. For example, you buy a share of Apple for, say, 150 euros. You literally own a tiny piece of Apple's success. When Apple launches a hit iPhone, the stock price can climb, which means your slice becomes more valuable. Plus, some companies pay dividends, like little bonus checks just for holding their stock. So, of course, if Apple stumbles, your share price can dip too. But that's why you should pick brands you believe in, such as Louis Vuitton, Nike, Microsoft, or Apple. Next up, let's talk about bonds. Think of bonds as you lending money to a company or government, and in return, they agree to pay you back with interest over time. You're not buying parts of a business like with stocks, but you're acting more like the lender. Bonds are generally considered lower risk than stocks, and they provide steady, predictable returns. So while they might not shoot up in value overnight, they're great for balancing out risk in your portfolio. For example, when you buy a bond from the German government, you'll earn a small amount of interest each year and then get your full investment back at the end of the term. It's like having a reliable income stream, slow and steady, but it gets you there. Now let's talk about ETFs, which are exchange traded funds. Imagine buying a curated basket of stocks or bonds, everything from tech giants to green energy startups in one go. ETFs trade like stocks but offer immediate diversification, so you don't have to pick individual winners. It's perfect for beginners or busy bees who want a broad exposure without the hassle. Now let's talk about derivatives. And don't worry, the name sounds scarier than it really is. A derivative is a financial contract whose value is based on something else, like a stock, a bond, a currency, or even a commodity like oil or gold. Think of it like this: if a stock is a designer bag, a derivative is a resale contract that bets on what that bag's price will be next month. You're not buying the bag, you're trading on the future price of the bag. The most common types are options and futures, and people use them for two main reasons. The first reason is to hedge risk, like insurance in case the market moves against them. And the second reason is to speculate, trying to make a profit by predicting where prices will go. But here's the thing: derivatives can be risky and complex. They're not usually for beginners, but understanding that they exist and how they work is part of building your financial confidence. So, why bother with investing? Because letting your euros sit in a savings account means losing value to inflation, which is a silent thief. Investing in securities gives your money a chance to grow, outpace inflation, and build real wealth. It's not just about affording that bag or the shoes or the dresses, it's about having the freedom to choose the life you want. So, let's do a quick recap on what we learned so far in this video. Stocks are slices of a company and it has the potential for high growth and dividends. Bonds are loans you make, which have steady interest and lower risk. ETFs, think of them as baskets of investments. They're easy and you can diversify as well. And derivatives are contracts on assets, advanced risk management, or speculation. And each plays a unique role in growing and protecting your wealth. Thank you for watching this video, and if you found this helpful, hit like, subscribe, and share with your besties who need to hear this. This is the Pink Portfolio, Finance with Finesse, where we turn money talk into your new favorite accessory. Catch you in the next one. Bye.